What's up, YouTube fam? It's Dark Angel's Journey, and I am Shakira. What is, you know what? Constantly fighting with the brightness of this camera. What the heck, man? It's dark when it starts. It's light again. I still have the settings in, y'all. Still have the settings in. Anyway, happy Sunday. It is a winter wonderland out here, and it's beautiful. So who cares? I'm good to go. I got my honey ginger tea. So, what a day, what a day, what a day. I had to restart this, so I'm not quite properly set up. So let me get um my back testing, my hindsight testing window up and ready. So, and I also need to get my I also need to get my journaling set up as well. So that'll be fun. I'm gonna try and do everything in one go. All right, so primary purpose of this video, I'm gonna do hindsight testing, which means I'm gonna go back in time with the data. I'm just checking what it says about the bit rate higher than expected. Still haven't figured out how to fix that, but whatever. Anyway, so what I'm going to do is, like, the last time I was doing power of three exercises just to get comfortable, I went through 3 years worth of that data, and man, that took a while. Anyway, as Bob would say, nerd. But guess what? I love being a nerd. What? All right, so now we're going to like start a year's worth of hindsight testing. So based on what my normal setup is, I'm going to take a look at the New York session and see if my setup would be a win or a loss. Doesn't matter. I'm not going to like take like, oh yeah, I wouldn't have taken that. Nah. If I would have taken it, we're going to note it. We're going to see what the loss is. And then we're going to, maybe get through like a week's worth of that to start and then see what the week would have ended at with that, like, mindset. This is with the assumption that I'll take like 2 trades a day max. So if there's one loss, I'm definitely gonna like look to see if there was a secondary entry for that loss. Okay. Let me get tiny. All right. And I need to do one other thing, which is to set up my journal to the side so I can document each of these, and then we'll be able to see what we would have actually gotten on said day. Sound fun? How was the week's worth of trading for you guys? Let me open up. So I'm using this dashboard called Notion, and there's a template in here that I can utilize to document each and every trade. So I'm going to be doing the date, the entry type, the day, the month, the stop loss, the risk to reward, and the time. And then I'm going to take screenshots. So that part might be boring, but I'm going to want to review this later on. It's funny, like I have 2 screens up and I wish I had another screen. You know what? Maybe I can like use this other screen where I'm like looking at the YouTube section here and put the, ooh, yeah, because this thing has the option. I've never used it before, but like double display like the window. So give me a second. Let me work that out so I can do both things at a time. See the chat if anybody is chatting with me, and then also add my notes in while also looking at the OBS. Anyway, let's get started. So I have backed this up. Let's back up to, we're going to do 2025. And we're going to go backwards and start with December. Wonder if I should start with like January 1st and just keep moving forward each day. Let's do that. Because December's a shitty month to trade, I'm finding. All right, so January. So let's see. This is the. So this is the first day in January. So let's hit the replay button and let's get right here. Other reason why we're doing that too is to make sure that we have the right mindset for like the daily bias and all that jazz. All right, so we have January 2nd, December 31st. So from a daily perspective, we would have been bullish. We just had a shift in structure here. So a continuation bearish for January would not, the first day of January would not have been weird. Let's check the 4-hour on that one. And yeah, let's check the 4. What's up, Bob? How's it going, man? Happy, what day is it? It's the, it's also, snowing outside for us in this area, which is very odd. All right. And so I said, I'm doing hindsight testing. So I'm not going to do back testing where I'm going to go back and then see what happens. We're just going to like look at the day, see if the setup would have played out, document it, and then come back the next day again. That's all. Also, I discovered a new position calculator that I am excited to use. So we'll also utilize this in this one. So I can get comfortable using it as well. Now, if I can remember where I put it, you know what? Let's do this. I think it was Trading Compass. Trading Compass, tools, position sizing. Yes, let's go. So I was looking at this yesterday, and what I really love about this is the fact that, you can they have so many items that we could be trading. So easy peasy, let's grab the NQ. Let's give it whatever that balance is, 100,000, whatever. And let's set the risk reward to 1, like 1%. And you want to get like, let's say the stop loss is like 120. Woohoo. And it tells you how many contracts you need to trade. And you're risking $1,000 on 100K. How cool is that? I love it. So that's going to be like super helpful for me. Oh my God. That is hot. All right. So we are on January 2nd. Oh, January 1st. Okay, yeah, January 1st. So super bearish, would have been looking for shorts. Let's look at the 1-hour. Tuesday, so the Wednesday would have been looking for shorts. The 1st, okay. I always have noticed something. Like sometimes when I'm looking at TradingView and I'm looking at a day in the history, and I look at the daily, like let's say I add like a second cut window in here. Sometimes the day is missing, like just plain missing. Like I zoom in and it's like it's the 1st and then the 3rd. Like it just skips it. It's weird. Anyway, so this is the 1st. The morning, and then we would have had, let's see. And the first 6 o'clock. Okay, right, yeah, 6 o'clock and 7. So let me add the boxes in here. There we go. Ha 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 ha. So it looks like on the first, oh yeah, that would have been a half day. So like no like New York session per se. So yeah, we still would have had to work with the second for make sure this thing is properly set. That way I just know which 8:34, 2 a.m. to 3. That's fine. All right, so from the daily for our 1 hour, we would have been bearish. Let's look at the 15-minute. Well, everything is in line for bearish, so 5 minute. Let's see if we would have gotten anything. So we had the 9:30 open. I would be looking for reasons to go short in this whole scenario here. One thing to note, right? We had consolidation in London. So what they did prior to open is they took London out, and then at open they took out the lows of London. So, and then they also did not take out Asia lows right here. So this would have been like a potential target for, that would have been a target right there. Oh, one other thing I'm realizing I'm going to be doing more often as I do this is I'm going to be looking to see what higher time frame PD arrays we might be able to dig into. So I'm also going to note, I'm looking to the left here to see if there's like a fair value gap or something that we could dig into. There's one right here. And then there's also another low here. So that doesn't necessarily mean I would look for that particular low. It just means that I need to note it. All right, cool, cool, cool. So let's go back to the 5 minute. All right, so then we dropped, take that out. I would have been looking for some sort of push up to find some sort of short opportunity. So I wouldn't need this high to get taken because they already took London out, so that's all right. Would have been looking to see if they like if they're digging into or respecting this order block right here. So I'm just gonna note that here. And hindsight, like I'm trying to pay attention to all the little minute details. I'm just gonna note that we had this little order block here. They tapped into that and dropped. So then my general preference though would have been for them to have taken something out, right? I know it's okay for them to also dig into like a higher time frame PD array and then get rejected from it. So let's go back up to the 1 hour and see if there's something else up here that they got rejected from along with that order block. So I'm going to note this higher time fair value gap right here on the 1 hour. All right, so now I get context. I have a higher time frame PD array that they're dipping into, and then I have a 5 minute fair value gap that they're also digging into. So now I have more context. Now I feel a little bit more comfortable. It doesn't feel so like I'm shooting in the dark when I'm thinking about my next setup, right? So I would have been very, very interested. So with this very juicy rejection right here, and to be clear, like this whole thing is an order block, which is very, very annoying because it's huge. And I would be looking for some way to get into a short from this scenario. So we dropped into it. I would want to see them, tap back up into one of these fair value gaps and then drop. So fun fact, I would have been interested in this short right here. it wouldn't have been an A plus if I'm being honest with you. So let's see. Well, one thing to note, like I would need to see where the stop would need to be to even decide if it's worth taking, even with micros. And if the risk to reward would be worth it, because I would have considered tapping into that low and then digging into the base of that fair value gap. And 298 ticks. Ooh, let's look at the 1 minute and see. Oh, data point is not available. It's too far. So how low can we go? Can we go to a 2 minute? Yes, we can. All right. So we would be, for all of these tests, we would be looking to see if there's like a 2 minute scenario that we could have played with. And this way, I'm trying to see if there was a better entry after this on this, I guess in this case, on the 2 minute, if there's a better entry. Uh, I would say this isn't exactly my setup because let's like take a quick gander, right? The setup is simple. We're looking for, let me do this. And this is just a good way to remind myself, like, so we're looking for, let's dig into empty space for a second. So we're looking for some buy side up here, right? Like, or in this case, since we're looking for a short, so we're looking for some buy side, right, to get taken. So if we do this, sweep that, drop back, tap it, get another nice change in the state of delivery, tap back into that somehow, and then dig our way down into sell side. Like that's what we're looking for, right? So that's why like this setup doesn't quite, reek that. You know what I mean? Now I'm wondering if I should, since they took this out, right? Like I should be potentially looking for retracement into this area, right? Like this is the London, this is the buy side for London. They took it pre-market, something that I noticed they do like a lot, right? And then maybe looking for a return into that area for a short. And then that would match that model. And then we could reach for the lows here or the lows to the left that we determined here. So let's see if that would have worked better, because I don't feel comfortable with any of this because we haven't. So we're dropping and we roll back up, and then this right here, when it blew past this, that's like the next leg of the change in the state delivery, not this. This is all internal crap, and it's not clean, it's not clear, it's not, it doesn't make sense to take that. So, but if I change my focus, to the setup, which is we have buy side here, right? Took it here, and then wait for a shift in here, return back up, because this is what this looks like to me, and then a retracement back up into it, into something, and then a nice juicy drop. So if I think about it like that, if I think about the power of three and the fact that they took the consolidation ahead of time in pre-market, then I should be looking for some return to get a short in here. It still doesn't feel good. It doesn't feel like I would take any of this. Um, hmm, it's a sweep. From this sweep, would we consider this shift here? I don't know. Because it's not like perfect, let's look at the 15 minute. Like, let's look at it from a 15-minute order block perspective. Like, this whole thing. All right, so that would be the change in the state delivery when they like dropped, and then they made equal lows down here. So this is why it's so much better to look at the higher time frames, because then that would like help me figure out like where I would actually consider an entry. So if we look at the 15 minutes, this is a shout out to Thomas and the conversation we had about the chain the CID. So this would be like market structure shift, change in state of delivery, whatever you want to call it. So let's say the CISD says market shift on the 15 minute. So knowing that that occurred on the 15 minute, maybe what we should be looking at is a retracement back up and a reason to go short. So next we have the order block here that caused the change, and then at open we just sort of we swept back down, but we didn't take this low. We made equal lows, and then we rolled all the way back up here. So 10 o'clock, beautiful time frame. So 10 o'clock, we've pushed back up. So maybe we should be looking for a short in here after seeing the rejection at the 5 minute order block here. So let's dip into the 1 minute. Oh, 2 minutes, sorry. Can't go any lower. And see if there's anything, and I'm going to take this box off just to make things a little bit. So we have two confluences now looking for some sort of reason to go short. One, we have this order block up here that they've tapped into, wicked, and then we also have the 1 hour fair value gap that they're wicking from. So I would, no joke, once we dropped here, I would have liked an entry like at the base of this, at the top here of this tiny little fair value gap. And I would have had to put my stop like right there. It's 153 stop. So let's see if 153. So then, with that much of an account, you'd have to have 13 micros for 1% risk. And let's be honest, I don't like risking a whole percentage. So 0.5% is my favorite. So for micros, I would be trading 6 micros on this if I had this much money to trade with, just as an example. And then we would be looking for something like that. So obviously we did not get that entry. Actually, you know what? I'm being a dum-dum. I apologize, y'all. So with the lower time frame, I really just need to cover no, that's not true. On the 5 minutes, if there's an entry on the 5 minute, I need to cover just the 5 minute order block and like the fair value gap before that. I'm trying to make sure my stop is like covered by multiple things. So the entry should be here. Like once this candle closed below, the entry should be at the base of this order block and then stop right above it approximately. And then, so we have the order block, we don't know that a fair value gap is forming here, but I'm using this one to the left that they've been using as support. And they tap back into, so there's a bearish fair value gap. I want them to respect it. And then that guy. So 3 things, actually a few things on this one that we're using to justify this entry, because I realize that I've been way too rigid with the way the entries need to be. So let's take a beat to think about what day is this. This is 2025, January 2nd. And January 2nd is a Thursday. So I'm just setting up my I'm just putting this in my journal. So January 2nd, 2025, entry model would be, so we have the shift. I'm gonna say this is more like an aggressive, advanced type of entry. And entry model number 2, I think. And then the stop loss would have to be 39, 157 ticks. Let's say 39, 157 ticks. And then the risk to reward on this puppy, if we get it, would be, oof, that's kind of, oof, 1 to 7. I mean, if we be less greedy about this, from this thing, I mean, if we be less greedy, we don't even need the extremes to be taken, do we? Nah, 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 nah. We could like guarantee that we'd get what we want, and we could do a 1 to 4.28 and see if we can dip down into this guy instead. Obviously, we could. So, uh, the risk to reward is 1 to 4.28. Okay, 4 point. Risk is 1. Trying to make sure I'm doing this off. Let's see what's up. I gotta make sure I do this right. Let me look at a set. Let me look at a stop loss. Oh, reward. 4.28. Let me make that number. And the timing of this trade would be, if I got tagged in on this candle here on the 2-minute, would be 10:18. So let's say 10:15. Okay, so then it would be in line with the daily bias. The sweep of the high happened pre-market. We had a very ridiculous clean market shift beforehand. We have fair value gap and an order block as well. And then, I mean, we technically had a session power of 3 too, with London's accumulation, then the manipulation to take it out, and then we're considering New York as like just continuation. And we did tap a high time frame PD array, and there was definitely a 5-minute shift that occurred. All right, so we had a lot of little confluences to make this trade a thing. So entry would be on technically the 1-minute, and then I would need to take some screenshots of the day and pop it into my notes. Okay. All right. I'll do the screenshots later so you guys don't have to be bored with that piece. But that would be a potential entry once we got like the rejection off of the order block and the higher time frame. I'm gonna feel like I'm no longer willing to wait, once I get the confluences that I need and they're all working together, then this wouldn't have been a bad trade. I'm not gonna lie though, like if let's say I did miss this one and then this occurred, we had no real shift on this guy right here. So nothing to do. I would have liked the sweep here and the dip into that as a secondary type of entry. I would have liked that. So then once we did this nice drop below here. Hey, Ebenar, how's it going, man? It's been a while. Happy New Year. I would have liked the sweep into this bearish fair value gap and then the nice strong drop. I might have considered, so this is the order block right here. I might have considered an entry at this fair value gap with the expectation that they might stay below it, and that would have been a loss for sure. My stop would have, actually no, based on where the stop would have had to go, I probably wouldn't have taken that. It's just too much. The stop was just too high. And I don't think I would have caught anything else in this day. Like that's the only potential, and even that's a bit of a stretch. But that's a bit of a stretch. But it is good to be able to see a potential setup that I could take based off of all of these different confluences. We had the sweep of the high pre-London. Let's look at that on the 15-minute one more time. So we had the sweep of the high pre-London. So all of this was London. We swept it. This is a 1 hour fair value gap that they dipped into, and then they dropped aggressively from it. So the thinking is a return back, a retracement back in for New York into what is essentially a order block here on the 15 minutes into the higher time frame PDOA. If we see a nice rejection from this place, just take that puppy. Wolfie, let's go. If you want it, let me hear it. Let me know. I. Sorry, that triggered me. Yeah, but otherwise, I don't really see another way to get into a trade here. Um, Based on this is a juicy day, but it's kind of mean, you know. All right, let's nip over to the next day and see if we could trade that. So, and let's move forward one day. Perfect. So for folks joining, what I'm doing is hindsight testing. So I'm basically just taking a look at what I would have done that day, whether or not it was a win or loss, and then just documenting it. Because what I want to see is if I'm going to do a year's worth of this, and then I'm going to be tracking. You did, Wolfie. That's awesome. That's awesome. I also found this one on Trading Compass, which is so cool. Like you put whatever your balance is, and then you set your risk percentages and whatever stop loss you're planning on using, and then it'll just tell you how many contracts you need for that. It even gives you like a little profit projection at the base here, which is really nice. Hey, Maddie, what's up, pretty girl? You coming up? Hey, it's kitty time. Who's my baby? Who's my girly? And she's gone. Okay. But I will check that out. That's awesome, Wolfie. I appreciate that. All right. So, overall, bullish. We had a nice bearish sweep here. I would, a return back up is not weird, but I probably would have still been bearish. But let's see. So everything coming into this next day would have been bearish. We did sweep that low. Nice. So let's look at the 4 hour. Let's look at the 4 hour. Actually, let's clean this up a little bit and we'll come back to this. I feel like I'm supposed to have taken. Come back to that. Yeah, let's clean that up a little bit. Let's remove the drawings for now. Okay. We'll put those back. So, well, we'll put it back when we get down to like the 5 minute. So, nice big bearish move. Everybody would have been wanting to continue going short from here. Coming into the second, actually the third, sorry. We would have been looking for, wow, everything would have been looking a little bullish. I would have wanted some sort of retracement, push up, and then strong retracement for a bearish move. So the 1 hour. Looking at the Friday. So London would have been a ton of consolidation, gross. Yeah, so London would have been the yellow's London, green is New York. So London would have been a ton of consolidation. Oh, if we were to have considered being bearish for that day, we would have had to see a strong bearish continuation. So what I will note for a higher time frame is these. You see these lovely equal highs up here. I'm gonna note those as some buy side, just so we have them to work with. And then I'm gonna note this low, these equal lows down here for some sell side, because that's where I would have originally been considering something. Let's take a look at the 15-minute. All right. So one thing I've learned as I've gone through the data is to be just a bit more flexible with my thoughts on the day. So letting price tell me what it wants to do is a preferable process to actually just being so rigid and particular about, you know, where it's gonna go. So I might have come into this day feeling super bearish, right? I would have. But things I would have considered. Um, we had this bearish fair value gap right here. That price was just sort of hanging out inside of the top of poor London. No joke. After going through like 3 years worth of data for London, they tend to consolidate a lot. I feel so bad for London, the people who trade London a lot of the time because there's so much consolidation in London. So what do we get at open? We got some juicy push up right here, which again would have been something I would have wanted to see if I was trying to go short this day. But price has to tell me what it wants to do. And I'm finding that I love looking at the 5-minute for what I want. So here's something that I would have taken as a short, right? I would have considered this. Guys, I got OBS dropped me for the very first time, y'all. It disconnected and then reconnected. What? Can you guys hear me now? Again, can you see me? Is it back up? It said it reconnected, but just I'm gonna assume it is unless you guys tell me it isn't. Okay. All right. So this would have been the first loss, I think. So we had this big run up right here. Okay, good, perfect. Yeah, it kicked me for a few seconds there. I don't know what's up with that. Does it look blurry to you guys? Still says excellent, but I'm looking at the YouTube window and it looks very blurry. All right. It really does stream. Okay, let's not reset that, but yeah, I hope it's not blurry because, all right. Anyway, I hope it's not blurry. All right, so I gotta thank Thomas because he did send me that change of state delivery video, and it really did adjust my mindset about the shift in structure, the market structure shift. So this first push up, right? This would have been the big order block, but the moment this blew out that top, that would have been the next like area. So now the order block becomes these two candles instead. So once these two closed down here, I would have considered the short from here and my stop would have to be up here somewhere. So I would have to figure out how many, and I would have aimed for London lows. I would have to figure out how many, that's 223. Oof, that's a big stop, y'all. So with that much money, I don't have that much money. This is all hypothetical, but I would have to do 4 contracts to only risk $500 to have that giant stop. But this is great. It's so much easier to figure that out. So this would be 4 micros to have that large stop. If I had that much money, it would be great. Anyway, and then I would set it at the body of this guy. Sometimes, given the nature of the stop and where I need this, I would set it at this body and not this. And then let's dip down to the 2 minute to see if there would be a cleaner sort of entry available that we could take from here. Okay. Yeah, looks like that would have been fine. Order block inside of the fair value gap. Yeah, no, that entry would have been okay. So we would have been tagged in here, had a nice tiny little move. Okay, not tiny, 142 handle move down. At that point, I might have moved the stop at that point from this entry area. So, we get a decent amount of movement. I would be considering waiting for this low to get taken, but I would have adjusted my stop to about here just to minimize risk. And then because, we're moving. But the other reason why I would do that is because of this weak down close candle, we start moving this up. So I would have been stopped out for 12 handles on that one for sure. I'm just thinking about the way I think. And, once it starts moving in my favor, I'm not really super willing to take a big loss. But part of the rules too is to, sorry. Part of the rules too is to have a plan for when to move the stop, right? So this from the entry to this area, we'd already moved 178 ticks, which and I have to stop thinking about this from the context of minis, right? But it's a pretty decent amount. But I'm finding that even with the micros, and guys, no joke, this mind shift from looking for 210 ticks on one mini to looking for 500. Oh, did you on Friday? Yeah, no. What was the setup, Eminar? Were you trying to go short on Friday? Were you trying to go short on Friday? Yeah, because going against the rules will get you, will absolutely get you. So, but I would have, these candles here, I would have liked for them to get closed below all the way. But, I would have liked the reaction from here, and then I would have mitigated my risk to just this high, and then I would have been stopped out right here for that. So that would be January 3rd. Let me just make that note. So that would be January 3rd. 2025. And January 3rd is the Friday. And this would be entry model, I think, number 1, because we had sweep, shift, and retracement back into it, and then, entry. And what confluences did we have for this? Because that's important too. Like, why? What is the reason for getting into this trade? So let's dip back up into the 1 hour, right? So the daily bias at the time for me, um, the stop loss is 223, and this would be a minus. Let's a minus 12. Yeah, minus 12 ticks. Okay, and I think I calculated the other one incorrect. Hold on, let me. Where is it? This is the other day. Did I delete it? I did. So that would have been whatever. I'll come back to that one. Anyway, so that'd been a minus 12 on the reward for that guy. And then I'm just putting this in my journal, guys. So I'm talking out what I'm doing, so you know exactly what I'm doing. And the whole point of this, you went short, okay. And the whole point of this is to see, be honest with myself, take the trades I would have taken, note what I would have gotten out of that trade, and then just do it for the week. So let's see. This is, I would have gotten tagged in at about 10:40 on that day. And let's also note what were the criterias for this setup. Swear to goodness, this thing. All right, so my reasons for getting into it is in line with my daily bias, which is bearish. I had a fair value gap and an order block, and what I consider to be a session power of 3, but still got and then we also had a 5-minute shift. So, and the entry would have been technically on the 1 minute. Okay. So that would have been annoying. All right. So Ebinar. So since I'm going to take a pause on my hindsight, and let's take a look at Friday real quick. Just, let's take a look at Friday's price action and its movements. So these are my thoughts on Friday. And reasoning for all of that is, I mean, definitely don't go against your rules. If you have rules around what your entry should be, so if your rules say things like wait for some liquidity to be taken, and then couple that with wait for some sort of shift in structure, and then couple that with make sure it's in line with like the daily bias, then do it. But let's be honest, right? We're traders, right? We constantly have to war with our emotions and our feelings and all that little stuff. Like we are very feeling people when we're as traders. Not even remotely as much as when we're like working any other job. You know what I mean? Like, I don't think if you work any other job that you would feel the same way you feel as a day trader or any whatever type of trader you are. You know what I mean? So we're going to have those moments when we're going to, be dumb and take the trade that we shouldn't have taken. And that's okay. Chalk it up to being a trader. Put it in your journal. Write down what you were feeling. Take a look at it and then move on. Don't let it weigh you down, because if you let it weigh you down, then that you're going to bring that into the next day. And then if you bring it into the next day, it's going to affect your trading, and you're not going to get that juicy setup that would follow your rules and net you that win. I think personally, it's like the best thing is to follow your rules and take a loss, but you followed your rules, right? And it met your criteria, and just take it. 10 years, there are days when your head in the. Exactly. There's just no. We are human, okay? We're human. There's no way on earth that we're going to be absolutely, positively perfect every day. There's no way. The point is, that's why trading is the law of averages, right? You win more so that you can, weather the days when your head is in the cloud. And that's okay. That is okay. Because as I am not trading live just yet. I'm still finishing up all these exercises, but I plan to get back in February and trading micros, and I'm very excited because I feel a lot more confident, a lot less stressed. No joke, trying to trade one mini. Sorry, I got distracted. It's snowing back here, and I'm hearing the particles just hit the window. So I apologize. I'm not used to hearing anything back here except for like maybe birds or something. But anyway, so I'm very excited to get back in, and my all of this has been helping me so much to get my mind right. And you know what's funny? Like, um, the types of entries that I'm now willing to take with micros I would never take with minis because I was too scared to take it with my tiny, super tight stop. But anyway, so just to share what I was thinking on Friday, right? So the day before, we had this big juicy run up, right? This is the Wednesday, the Thursday, sorry, yeah, and Friday. So personally, I've decided that even though I know what the daily bias is, I'll let the session bias like drive me as well, right? So if the session is, aggressively bullish or aggressively bearish, then I'm going to go with that, right? So, Friday for me, I saw this market, we had, where's London? London's all around here. London low-ish. Eh, yeah, they didn't take it. But that's all right. So we had 9:30 here, and then we had a very, very bullish push up. And part of the reason why I really I liked the longs for this, at least in the AM, is the fact that um, they created these two fair value gaps right here, and they never bothered to tap into the second one here. They didn't bother. So that for me was a very, very bullish indication. Let me back up. They did. Yeah, it kind of blends in because I always like include the volume imbalance in here and the FEG, so I know where it starts and ends and all that jazz. Anyway, so they did. So one of my favorite things is that they tapped it and then they ran away nicely. So that gave me confidence for going long. And again, remember I was like, I'm totally flabbergasted by the fact that um was like trying so hard to get 210 takes, but now with micros, I'm looking at like 400 or 500, takes in movement for like $600. You know what I mean? So definitely something that I need to release. So because of that is why I was like super bullish, at least in the beginning of the day. And something that I should probably get comfortable doing is like once I see that big engulfing candle, no joke, I wanted a long right there at the top of that 5 minute order block. I wanted an entry there, but that would have required them to come back and tap it, and they didn't. So with this very, very aggressive move away from this 5 minute fair value gap, I should have felt comfortable, maybe setting my entry at the body of this candle maybe, and then setting my stop below it or something like that, or at least below the order block, like there, 141. Let's see, 141 tick stop. For that much money, I could do a seven contracts on micros. Oops, where is it? Where did my window go? That one. Okay. So then that would tell me how many contracts I could go for. And then I had set up some highs up here. Let's say I did not obviously get that entry, but it's an entry I would have been interested in. The entry I was, once we did run up, the entry I was interested in, again, did not get tagged in at the time. And I realized that, let's look at it on 5 minutes because I was interested in it on the 5 minute. The entry that I set like a paper, I'm just paper trading this, by the way. The entry I was interested in was at the base of this fair value gap, like the bottom of it, right? Somewhere between this small little fair value gap and the order block here and stuff. And I was so salty. Look. And this is how we are traders, right? Like they came so close and then ran. Beautiful kind of setup, and then they ran. Now, if I had caught that, then, I would have been I would have been aiming for this guy. And if I would be absolutely honest with you, I would have moved, nice move. I would have moved my stop to just under here to cover whatever fees for that particular however many contracts I had to cover. And I would have been stopped out on this run back. Straight up. I did, on paper, when it ran back down, I did take 3 contracts on paper with the hope that they would push up and take that high out and continue on up. So I think I only got about $100 on the 3, but hey, green is green, right? And that's still pretty good on some micros. But that's what I was thinking on Friday. Just to share that. Okay, back to our regularly scheduled programming. All right, so this would be the end of this week, and I would have been stopped out. So I documented that would have been minus 12 points there, because I would have been short biased on this day. And then I don't know. I don't know that I would have gotten anything else in the middle of all of that. Maybe if I was, once they broke up here, I would have probably considered some sort of long into that area here. But I don't know that I got anything that would have made me want to take that. Because I always have this like weird little fear that, we retraced back about 49 handles. There's no real fair value gap in here. Or maybe there was on the 15-minute and I just didn't see it. Okay, yeah. So the 5 minutes wouldn't have had a fair value gap, but the 15 would have. So that does change the game a bit. So knowing that now we've retraced into this 15-minute fair value gap and we have rejected from the midpoint of it, no bodies, just wicks, that would have made me more comfortable taking a second stage long from here. So let's see. And with micros, no joke, with the amount of times it's tapping it, I might have absolutely tried to see if they would let me get a setup from here, and then I would see if it would be worth it to take it to that. And what time would that have been? 12:45? No joke. I would have wanted to take it. I'd be eating lunch. I wouldn't have even seen this. But let's say I'm like super glued and I wasn't around for this, but that's the setup I would have taken, or this one with the stop below this fair value gap like that. And then I would have wanted to dip it up to here. That's what I would have done, if not this. But given that I would have been at lunch, I can't say I would have taken this, so I'd have missed it, and that wouldn't have made any extra mun that day to cover for that loss. In the PM though, we wouldn't have had anything juicy until after 3 o'clock, and I don't really bother with trying to trade. We would have had liquidity taken here, order block here. So if I were to take like the first entry for a short, which again I wouldn't have bothered with because that would my stop at the top of that thing, and I would have hoped for them to drop back into there. We would have come close, but I would have closed this out before 4 o'clock. So what would that have netted me if we even got into this trade, which doesn't look like we would have gotten it. The lowest they got was about 59, 58 handles. It's pretty good, but it's not great. So I would have ended this day with just the one attempt at a short here. All right. Let me see. I documented that. So yeah. Okay, so let's do a little cleanup. Let's head back up to the daily and let's nip over to the next week. So the next trading day is the Monday. Cool. That ended up being, so let's note things that we're digging up into. Oh, excuse me. That went right down the wrong pipe, y'all. Right down the wrong pipe. All right, so let's look at the daily real quick. Considering where we might go, we have this daily fair value gap as a potential area of interest, in my opinion. So we have this daily bearish fair value gap. Part of the reason that I would consider it is because still bearish, right? Still bearish based off of structure right here. And so this is a beautiful place for rejection. But if we're going to like dig up into it, then we could, use it as a target for longs. So let's look at the 4-hour. Let's look at the 4-hour for the 6th here. So this 4-hour is looking real bullish though. All right. And the 1-hour. So London was like a pure continuation. So this is nice though. This looks like it's going to be a good, maybe we get a decent session out of this. So London was just pure continuation. We had some manipulation right here just before open, and then we just kind of ran up. No joke. Given the fact that we were just running, I would need at least 2 levels of a shift to be able to like take a short in this scenario. And it doesn't look like they gave us much of an opportunity to even get into anything for longs. So first things first, I would need this to get broken. We did. We saw it there on the 5-minute, and then drop. Next potential area for a short would be right here at this order block. I love that they are rejecting off of the midpoint of that daily. So potential for a short would have been right around here. Let's see where to stop. B. I want it to be a bit above this fair value gap. Technically, I wanted to be here. It's kind of a scary spot, but given the way I like my stops, like 3 micros, stops would be about 123 ticks, and then we got this big wick right here. So I'm thinking about the midpoint of the wick would be a good place to aim for. I don't necessarily expect that I probably wouldn't have been wanting to see if they would take the wick out, not entirely. Plus we have this order block right here not order block, fair value gap right here and here that they could dip into. And so we could, tap into the top of that order block right here. That's plenty, right? So that would have given us a very nice return, honestly. Let's take a look at that on the 2 minute, see if there's like a cleaner, juicier like style of entry we could have used. Oh yeah. So we would have like tapped into this and rejected. Very nice. So then I would have adjusted my entry to the base of that guy right there. And my stop would be right above this high. So no real change there. And then I would be aiming for, I don't need that low, but like I said, the order block, on the higher time frame, it's like a fair value gap or something. So, just aim for that in some of that measurement, whatever. And then that would have paid. And let's see, that would have occurred in the PM. Was there like a cleaner? That's the other thing. Like that's what the 5 minute would have told me for an entry. Once we had this shift in structure, we could have also looked at, on the 2 minute, we could have also pulled a better entry here after this. Yeah, once that's done, see this, nice. See, take it at the bottom of that order block, the body of that order block. And then the stops would be right above that top. So that 108 tick stop, we could go ham with 100K, right? 9 contracts. And then same target. So those are the 2 options for trades for this day. Let me see. The entry for this one, the second one, would have occurred. What time is that? 1:02. I would have been back from lunch. I could have potentially taken the second one. Probably not, because I'm just back. I'm just starting to look. I don't know if I'd be like running into another short. So the only really real one, like once this occurred right here, would have been this potential right here. And then the secondary, let me see, do we have another opportunity? Yeah, actually. So we have another opportunity right here. Stops up here, of course, and same target. So like those are the 2 potential entries that we could have taken, and these would have been at lunchtime. That would be for the shorts. It looks like we might have gotten something for the longs up to here. At least the question would have been like, once we ran up, did we have enough to make it worth our while to the top of that fair value gap? And was anything clean? Because that's the thing, right? Like if you look at it on the 15 minute, on the 15 minute, we don't have anything to do, right? It's all just pushing up. On the 5 minute, if we were to consider, we had some consolidation here, sweep, if we were to consider longs and just base it off of the fact that we've just been pushing higher, then there could have been a potential after the sweep. We did have this order block. They didn't run back into it. They left it. So then the next opportunity for a long would have been at the body of this order block right here. And looking for something, the top of the fair value gap maybe. And then the stop would be below that guy, right? Something like that. Question is, for higher time frame push, what could we have aimed for, right? And we could also adjust the fair value gap to the 1 hour one and adjust it to that guy for a better, what's the word I'm looking for? TP as well. Because this is the daily one. If I superimpose the 1 hour one over it, yeah, we could have also looked for the top of this as well. Either way. And we would have gotten that. So if I was long focused on the day, this would be like, let me zoom in here. And let's go down to the 2 minutes again for this one. Let's just see. Would we have even gotten an entry? I mean, being honest, this one had the fair value gap, so would have attempted the entry here, make sure our stop was below both of these candles in case they wanted to dip in. And oh my God, we would have gotten like the smallest just tap and run for that. So yeah, I mean, there are a couple of entry options in here. I'm wondering if I'm going off topic with the bias, because the session bias was very, very obviously bullish, but the overarching daily bias was very bearish. So this would have occurred at 10:10. I mean, I'm trying to think, like, would I have taken that? Would I have taken this one versus waiting for them to come up here, shift, and then taking this one? I'd be at lunch for this, so I would have to say no. I probably would not have gotten this one. And it is very tricky. It is very tricky because I have to be honest with myself with this. Like, would I have been would I have been sitting at my desk to take any of these, even though this is obviously beautiful, juicy trade for sure. Um, and I don't like when they're wicking like that. Like all this wicking, it gives me ulcers, And it would have been kind of mean. I mean, look at that. It's just weak. Why do we need to do all of this? We didn't even need to do all of this. Like, you swept everybody out. For what purpose? I don't know. And then you ran up. No fair value gaps up here. I mean, if I'm being honest, I probably wouldn't have gotten any trades in this day. And looking at the PM, I would have probably caught, I would have probably caught this one. Because I'm trying to also remove I'm trying to remember the time factor thing too, but I would have come back in at 1. Where's 1 o'clock in this whole thing? I would have come back in looking at this at 1 o'clock and been like, But something that might have given me pause would have been this wick right here. That wick, let's move that. That wick would have given me pause. So these are all the potential setups that we could have taken if we were sitting there. I probably wouldn't have gone long in all of this Mishima. Don't like it. So I would have waited to see if the PM gave me something cleaner, which it did. And then we had these two little order blocks right here. This is 1 o'clock. So I would have been looking at these order blocks and seeing that we wick down. We're still very bearish. Potentially, I would have tried at the body of this guy right here. And then I would have to sit through a lot. So after 1 o'clock, I would have to sit through a lot of break even BS before it moved. Same target. So this is the only trade I would have taken. Yeah, Wolfie, very tricky. This is the only trade I would have taken. These are all potentials, but it's really the only one I would have, if to be honest with myself, given my job and all the meetings and the timings and all that. It's the only one I would have taken. Let's be very honest. But these are good to know. Setup wise, that they would be, good trades to take. So let's document this one. So this would have been a plus 423. Very nice. What day is this? This is January 6th. We're just going to put this in our journal. I know you can't see the journal. It's on my other window, but I got to document everything that we're testing out here. So January 2025, it's the 6th. Looking at the 6th. And this would be, so we have a shift. So this would be, I think, entry model number 2, secondary entry, maybe even a bit of an advanced entry. And then the stop loss would have been 123 ticks. And then that would have been plus 423 for that day for micros. And that we would have gotten that approximately 110-ish. So 110, 115. And then what are we going with? We're going in line with the daily bias that we have. We had a very aggressive move to sweep some highs. And when I say highs, I mean the London highs. We had a clean market shift on the 5-minute right here, the CACD continuation. We had order blocks on that puppy. We did have the 5-minute shift. So I'm just noting all the reasons why I would get into this trade. Yeah. And then we did have a fair value gap that we're below the midpoint of the daily. So let's note that we had a daily FVG. We do. And did I already say we had an order block? Yes. Okay. So reasons for this trade, we're in line with the daily bias, which is we wanted to go short in the first place. They swept the highs. That's London. We had a clean market shift on the 5 and 15. And then we had an order block that was available for us to take on the 5-minute. And then we had another 5-minute shift here, not super clean, but we did have a fair value gap that it was rejecting off of, including the daily one. So that would have been the only trade I would have taken this day. All right. Let's clean up. Let's remove all of that and let's go back to the daily and let's move forward one more day. So again, let's note, oh, sorry guys, I did not mark out that daily fair value gap correctly. I just noticed there was a lovely volume imbalance in here, which I always include into the fair value gap. So let's note that. So we have a daily bearish fair value gap that they ran up into and rejected from, which is what we were looking for. And then looks like we got a nice juicy rejection. So let's see what we got on the 4-hour. Looking very nice and juicy bearish. London looks like it was, I feel bad for London, man. I really do. Like, there's a lot of consolidation in London. But at the same time, it makes New York session better. You know what I mean? All right, so you know, pre-market, it would have been looking, we would have had London. No joke. As I went through the Power of Three thing, I've noticed that my favorite scenario is if London is consolidating or accumulating. I'd love when they sweep it before New York opens because I know that all of that manipulation's done. All I need to worry about now is finding an entry in line with direction at that point, which is quite nice. So let's dip down to the 5 minute. So this is one of my favorite type of days. I love it. This is beautiful. This is just beautiful. We have London sweep right here, beautiful. And then we had this high and then a lovely juicy shift right here. So this all happened 10 o'clock. And then next potential opportunity for a short is, once we busted below here, I'd be hoping to grab a short, depending on how big the stop needs to be. So while all of this is forming, right? Big juicy drop, nice 5 minute body. I'd want to see where I need to put my stop. Given that like about 3-2 micros would have been like the most I would be taking. I would have to see if there was like an easier entry on. So somewhere in this 5 minute order block, I want a setup, right? So let's drop down to the 2 minutes and see if we would have gotten something I would have liked. Okay. So I would have probably tried, let's see, trying to think like, if I look at the flow of all of this, we have this, yes, there we go. I'm constantly looking for inversion fair value gaps to work with in this scenario, right? So we had this small fair value gap right here that we disrespected harshly. Because I've been using these guys as areas to kind of specify where I want my entry. So this guy's really tiny, and it's probably bigger or smaller on the 1 minute. I don't know. We can't go back that far. But I would have liked to adjust my entry to the base of this guy, most likely, because we have this order block too. In this case, we can call it, what does ICT call it? The mitigation block. I don't really use them very often, but we can take it into account for this scenario. So we have a mitigation block. That thing's been like disrespected out the wazoo. We have this guy, this guy, this guy. They've dropped in. I don't know that I expect them to run back up to this order block right here. I really, really, really don't. I don't consider these two order blocks because of this break in it, and it probably is on a higher time frame. Hey, what's up, Maya? How you doing, man? Happy Sunday. It's still snowing here. So let's dip back. So we're looking at it from the lens that this would have dropped. Hey, no worries, man. I appreciate you. I'm just over here doing my hindsight testing and documenting whether or not I would have taken the trade, being very honest with myself, and just noting that, and then journaling that, and then seeing if it would have been profitable either way, for like the week or so. But hey, it's good to see you, man, or good to read you. But yeah, on the 5 minutes, we have this big fair value gap. I'm not gonna lie, I would have set the entry here. I would have set the entry at the bottom of that, and then I would have set my 123 and just let it go and not worried about this tiny ass fair value gap. Because they're tiny, it can be disrespecting. It is snowing, yes. It is snowing in the DC, Maryland, Virginia area. And just to be clear, right? Like it's hilarious. And one of the reasons why I love this area is the fact that they have yet to figure out how to prepare properly for snow. So that means that even the tiniest little trickle of snow, schools are closed, work is delayed or closed. It's great. But if you go to any other state like Detroit or Minnesota, any other state where they get real snow, uh-uh. They know what they're doing and you gotta go to work. You gotta go to school. You gotta do stuff. So thanks DC for being so unprepared. Although, let's be clear, why is this thing always doing this dark light, dark light? Oh, I've set the settings and it's still doing it. It's so annoying. Even with like extra light on me, it still does it. It's weird. And Bob hooked me up with the settings and it's still acting up. I don't know what to say, man. Anyway, so this is the trade I would have taken, and by some miracle, I would have gotten tagged in and I would have gotten the full pull for that low right here. So let's document that puppy. So we are on, what day is this? January 7th, 2025. So January 7th, 2025. And I would consider this entry model number 2, meaning when I say entry model number 2, meaning we had a shift, we had a sweep of liquidity, shift, So first entry would be the first sweep, if you could get it here. Second entry is this one, another entry model number 2 here, if you catch that. And I guess, yeah, one more entry model number, still entry model number 2 because there's another big sweeping shift in the state delivery here, continuation, boom, boom. So yeah, entry model number 2. Now, reasons why the trade would work. Oh, first, let me set my stops at 122 approximately. TP's at, 654. That would have been a juicy day on 3 micros. And then the time I would have gotten in would have been 11:25. Something I'm noticing, right? Like the clean setups will not always show up at freaking between 10 and 11. Sometimes it happens after 11. Anyway, so that would have been that. And then reasons for this trade. So it's in line with the daily bias. Again, we had a clean, we had the sweep of the highs. So we had power of 3, we have session power of 3. We had a nice 5-minute shift for sure. We had a fair value gap that we tapped up into. We did technically have a small inversion fair value gap, so I will note that. And then there was very clean market shift, very clean market shift. So, and let's see. The entry for me would have been on the 5-minute for this one, I think. Just for it to be clean. Okay. And let's see, would I have taken a second trade that day? Probably not. Because you already made your money, man. Why you need to take another trade? Plus the PM wouldn't have given us anything clean until yeah, no, it doesn't fit my model, so no. All right, let's clean up and move on to the next day. So we're still bearish overall on that day. Oof, ugly. All right. So again, I'm still noting the bearish fair value gap that price has rejected from up here because it's important until we break above it. All right, let's see. So I would have been bearish minded for the day. Daily still bearish. Looking at it before and the 4 hour, well, consolidation with this consolidation still would have been very bearish to look at. And the 1 hour, what would we have like aimed for? Some juicy equal lows down here. I mean, they're just looking too clean, man. They're just looking too clean. So I'd be looking for something down there. And as always, we'd want to see some sort of like, oof, is that London's high? Let's note that. London's high is up here, so we did not take it. So something else that I've noticed too is sometimes, where's the buy side? Okay. Sometimes, go to the 15-minute. Sometimes when they don't choose to take out London and they just go, sometimes they just run. Obviously, this is a very shitty day. Let's be clear. This is a shitty day. And I would have probably noted that this is a shitty day and not bothered with anything. Let me tell you why. So this is the 15-minute. This is looking like crap. They did take out London low, and is that, yeah, London and Asia low were subsumed in this, all this pre-market BS. My preference would have been to take some stuff out at open, but things that would give me pause, all the wicking. Let's go to the 5-minute, which I'm finding is one of my favorite time frames now. Let's go to the 5-minute. So, reasons why I would not have bothered with this day. Yeah, it's all shat. It's shat. It's just crap. Reasons why I would not bothered with this day. One, I'm bearish. Yes. We opened. We did all of this grossness. We did sweep. We took something out. Just a little bit, something. And then we had a very strong push down. Now, I don't like this. I would have wanted one more push down, and then I might have considered like a target that's further down, like fair value gap, an order block, or even a low, depending on what it is and what's available. But my model is very simple, right? It's very simple. We're looking, so this would have been the London high. I would have been looking for something like this, even pre-market, take it out. And then I don't care about that high anymore. Right? That's what I would have preferred. But what do we get? We got slow grind up. I don't even think it barely moved in London. It's like a 65 handle, 66 handle day for freaking London's terrible. So I would have liked to see that. Why is my nose doing that? I would have liked to see that taken out. So what I didn't get is the entry model number 2 opportunity. So let's say I did consider this, right? Let's say I did consider this as a sweep, and it is a sweep, which makes this the order block, right? So then that means that we had these highs here, right? We swept them here. We shifted beautifully. Next thing I want to see is this. That's what I want to see. What do we get? Not that. So this would have been a day. I'd have been like, I would have just called this chop fest and come back tomorrow and call it a day. This is a no trade day for me. There's no follow through in either direction. So even if my bias had been bullish, right, on this day, or let me take that back. Even if my bias was bearish, which it was, right, on this particular day, then even if the session decided that it wanted to be a bullish session and push up, then this is what I would have needed to see for the bullish push, right? So, okay, we did this, reach back in, take it back out, come back down and go. That's the other thing I would have needed to see. With none of those things in play, Shakira be out. So this is a no trade day. So let's move on because literally nothing fits into the rules. Nothing. And it's okay to not trade. It's a poop day. Thank you, Eminar. You're absolutely right. It is a poop day. All right, so I'm gonna delete these two lines and leave that daily fair value gap. Also, I will note this guy that they've tapped into a few times on the downside as a downside target along with the lows. But anyway, so now we're off to the races for the next day. I would still be bearish. Still be bearish. Also, guys, another thing I've noticed, like sometimes when we have these big move days, like the probability for the next day to be crap can be high. I mean, we see it all the time. Like, look at this. Oh, crap. Crappish. The next round of days is still a move up, but they're crappy. They would have been painful days to trade. Look at this. Whoop. Crap. Like, that's 1, 2, 3, 4, 5, 6 days of crap. We would have had to take our time and be very strategic trading these days. But anyway, still bearish on this day, on this week. All right, so let's dip into the 4-hour. On this particular day, we're still bearish. We're still bearish. Still bearish. Okay, this is the 8th. You know what's really annoying? Why does this day look so juicy on the 4-hour? The previous day that looked like poop? Why does it look so juicy on the 4-hour, but looks like crap on the, you know what? Like, it's so rude. Did we not go forward a day? We did, right? Anyway, so looks like we're getting a repeat. We have, hold on, let me look at my notes. Did it move forward? Because the last trade we would have taken was on the 7th, which is this juicy day. Okay, good. And then this is the 8th. Where is the, okay, this is the 9th. Oh, you know, I got confused because my, the boxes aren't there for some reason. Oh, this is ugly. This is a gross day. Still bearish, but man, that's not looking good for anybody. Oh, is this like a half day or something? Is that why it stops at 9 o'clock? That's so strange. On the 9th, you know what, let's open up the calendar. And let's go to January, there we go, and the 9th. I mean, I don't see a reason why it's chopped off. Very weird. It's the 1 hour. Let's look at the 15. Yeah. What happened to the day? Hold on. Let's go up to the daily here real quick. No! Do not do not do that. That's odd. Why did it just ignore? Why did it ignore the rest of the day? Because I'm not trying to. This is hindsight testing. I'm not. Why is it doing that? Ugh. Hold on, guys. Let me push this forward by the hour. This is the 6 o'clock. Okay. Okay, there we go. All right, let's look at the 5-minute on this day. It's like it doesn't recognize it. How very odd. 9, 10. It's like it's Are we just skipping 9:20 to 6 o'clock? Yeah, it's just skipping hours. Oh, come on, TradingView. Seriously? Look at that. It's 9:25 a.m., then it's 6 p.m. Well, it doesn't look like we're going to be able to test this day out. We don't have any data for it. Great. Thanks, TradingView. Rude. Hmm, that's so weird. I don't have another platform to look at this on. Maybe my Thinkorswim, my TradingView, but my Thinkorswim, sorry. Cool. Wait, seriously, why? Why is it whatever? Let's move on to the next day since we can't test this day. Okay. So this is the 10th then. Is that the whole day? You're gonna give me the whole day? Jeez. Again, we are bearish. We were looking for these lows to get swept out regardless. Those are the lows we're looking at. Again, hindsight, so that's the whole point of this whole thing. Everything is bearish. Let's go to the 5 minute. Again, why is it not giving me what is happening? Hold on. Let me save and reset this, refresh this page. Okay, so me doing that reset it back to this January. So let's push it back. Let's hit the replay back to where we need it to be for this exercise. So this is January. Right there. Okay. Now, will you let me see the... Finally, okay, so TradingView is acting up just now. That's annoying as hell. It's like it ignored the Thursday like it didn't exist. What? That's a blip in the data right there. That's a blip in the data. But anyway, I refreshed and looks like we're coming back in. All right. So, what would we have done this day? We would have been looking for, this is the 15 minute. So we're very bearish. We've been bearish this whole time. London high not taken. We had a very big drop at 8:30. I assume there was news. And then we opened and we just like blew through everything I would have been looking for. There was a daily low here. Actually, let's dip back up into the daily. There's also the fair value gap in here I would have been looking for. And we could also note the top of this order block too. That's in line with the sell side liquidity, basically. Yeah, I mean, that's everything I would have been looking for on that day. I highly doubt that I would have caught anything. So big drop, big rejection off of this guy. We open and we just continue. So you know what? This is one of the scenarios where we're not looking for the exact movement that we're normally looking for. We're looking for continuation because as I went through the power of three exercise for 3 years of data, I've noticed that like when they don't take London and then they move aggressively, we'll continue in that direction. And we opened and we just dropped like aggressively. That's beautiful. The only thing that would have annoyed the hell out of me is the fact that we'd already dug into this daily fair value gap and taken the low out in one go. But since I'm trading micros now, I have the luxury of using much bigger stops. Let's consider what we would have done. So this is the open. And we have, depending on where my stop is, we would have been looking for something off of this guy right here like that, you know, with a stop above there. Actually, let's be honest, like 122, 123 is the most I want my stops to technically ever be with 3 micros. And then I would have been aiming for that low right there. So the question is, was there something on the lower time frame that would have given me that an entry that I would have wanted? So, or a clearer entry. So let's dip down to the 2 minutes on this one, and let's come over here. All right. Cool, cool, cool. Let's see. All right. Let me open this real quick, and let's set that to 123. Okay, so that would be what I want my stop to look like. I would prefer bodies, and I'd be trying to get in, because what we have here is a move up. We took that out. Looking for that retracement. Nice. What time is that? 9:45. Drop, and then I'd be looking for a reason to go short in this space here. The only thing that would irritate me is trying to figure out whether or not I should, you know, if I would take it because the low is here, right? Like, if I took the short here, like, how much would that net me? Let's see, is there a 4 hour, like, higher time frame thing we could have dug into? Let me adjust this fair value gap here. So what else could we be reaching for besides the lows? Well, do have some juicy equal lows over here as well. So I would have noted that as a secondary target. And then on the 1 hour, we have to, yeah. So it looks, it's a lot cleaner looking, the juicy lows on the 1 hour. So yeah, nice equal lows down there to reach for. All right, so let's drop to the 2 minute and see if we could have gotten a better entry, a better continuation entry from this setup. Okay. So ignoring this, we're not even thinking about it. We're trying to figure out, like, would we have been able to get in on here? And I don't take any trades prior to 9:45, so we would be waiting. Oh, my nose is itchy. It's so dry. Oh, I apologize, guys. Where I could have caught something. So my original desire would have been an entry, but with this stop, maybe we could drop it to 2 micros and take it at, given the stop 2 micros and take it at, give us a little bit more room. Let's see, would that have made sense? Because with this drop, I would be waiting for a fair value gap to form and then taking a look at how much space is between this, the order block, and a potential entry. And then we also had that guy too. But if I'm trying to stick with a one entry type, there's 2 ways for me to get into these trades now. It's either at the base, smooth that. It's either at the base of the fair value gap that's formed, like so, and don't worry about the order block at all, and then hope for the best in this case, or take it at the order block, like the body. And in this case, like if I had done that, 2 micros, like 160 on the stop or something like that. Um, it would have paid for sure. It would have paid for sure. But I'm just not seeing a scenario where I would have gotten into this leg. I probably wouldn't have gotten into that leg. I don't know what time is this, 10:48. But what I would have been able to get into is if I trusted this shift down here. Again, no, wouldn't have gotten into that one either, given where I wanted my entry. Very, very annoying. Now, I've seen folks, when they see this right here, take that entry. That's the only other option, I suppose. And then, given how close I was to the first thing, I would have wanted to try for the second. Because I've seen like other traders take that particular entry. Part of the reasoning around that is the rejection. So we're at a higher time frame fair value gap here, and then we're at the midpoint of it, and then we keep rejecting off of it. So we keep wicking and rejecting off of it. So taking an entry at either the midpoint here in the hopes they tap it one more time is not a bad play, if I'm being honest. And the other option would be to take it at the base of this candle here, but that would require them to come back and tap it, which they didn't. So I think for a continuation trade, this is like 9:56. I might have considered this particular entry. And if I'm gonna be super duper honest, I would have tried for 3 micros with that stop and been very nervous about it. Very, very nervous about it. I would have been thinking, I hope this 1 hour midpoint holds, and then I would have gone for that. And that's the only potential trade I would have taken. And this would have been entry model number 2 for me. Because, let's say, because we did have this little retracement back up, shift, retrace, shift, retrace, go. And I have to just trust that my stops will hold. It's much bigger. We had things in the way. So let's document that. So this would have been Friday the 10th, 25. And that would have been entry model number 2 again. And if we'd held for that whole thing, 466 ticks. Oops, the stop was 122, sorry. 122, and then we would have looked at 466. And then we would have gotten into this trade probably at about 9:56. And the reasons why this would have worked out. So we're looking at, it's in line with the daily bias. And we had very, very clean market shift. We had multiple order blocks and fair value gaps to work with. We definitely had a 5-minute shift, and we're kind of hanging out. And I think that's it for the reasonings around this guy. So that would have been good. And then the entry would have been like on the 1 minute or the 2 minutes or something like that. And that's why that setup would have been the only one I would have taken. Because this is the only like structure that we really had. We had a beautiful shift here, beautiful shift here. We have to trust that it's going to just keep continuing going down. And, I would, if no joke, Like once we busted past this low, I would have moved my stop here just to lock it in the, in because it's a low. They can reverse from those areas. It's also the bottom of the fair value gap. They could also reverse from here. So lock it in. And I would have gotten lucky that day to catch that. So that's it. All right. So far we've done 1, 2, 3, 4, 5 days because for some reason the ninth is just chopped off. Um, and so by this calculation, I would have had one. Actually, the first one's more than that. We would have been doing pretty well with one trade, just being so particular about the setups. The other thing I'm trying to do is like, since my entry can be, based off of the model, right? Like, again, I'm just gonna note what I'm thinking here. So we have liquidity up here. And my model is, we're going up, we're going down, we sweep it, and then we take back, and then we shift that, and then, to go towards some liquidity. And somewhere inside of this second and first shift, there should be some sort of fair value gap that we're digging into, along with like an order block in this space for that secondary entry. Not similar scenario here. So if I'm seeing a situation where the fair value gap is being respected with wicks like that, then I'm going to go with the base of the fair value gap or the midpoint. If the order block is like 3 candles, then I'll take it out of the order block as long as it's like close enough to the base of the fair value gap as well. I think that would be a good kind of like entry setup. What do you guys think? Otherwise, if my stop is juicy enough, right, where I can have 122 tick stop and it covers the order block and the fair value gap and all that jazz, I will absolutely just take it at the base of the fair value gap, and that way I'm almost, guaranteed to get in and still be covered by the order block and the fair value gap and the high. If that's the case, you see what I'm saying? Anyway, so that's why we're doing this, just to work through what would make the most sense. Oh, a kitty has arrived. All right, so let's clean up and let's head to another day. I don't know why it's probably the coldness, right? Like it's so dry. All right, let's tip to the next day. So we are still bearish until they give us a reason to be bullish. In this case, we are staircasing down. I am still very bearish. This is Monday the 13th. So let's dip down. Do we have anything juicy that's holding price up in here? So we have this whole bearish fair value gap, nice rejection from it. So for me to be super duper bullish or to be even remotely bullish about this situation, I need to see them continue to reject from here and then show us some nice engulfing candles in this direction for some follow through. For now, given all of this, we're still very bearish. And so what would we be looking for? Some previous days highs and lows. There's a nice juicy one here and here. So again, this is hindsight testing. So yeah, I mean, don't be mad that I just like pick what I see. So we would have been looking for this guy and then this low as well for daily previous days lows that they could take out. And then digging into this fair value gap here that we've just been tapping into. All right. So daily is very bearish. As we're coming into the day, we'd still be very bearish. Wait, did they take that out before open? Oh my God. Let's go to the 1 hour. Oof, that would have been a rough. Because London just tanked. London took that low out, so that's already dead and gone. So I'm just gonna remove it because it's just distracting. And so then we would have London lows here to consider. London highs up here for some juicy targets. We have order block that they can dip up into here, and a bearish fair value gap that hasn't been touched here. All right, let's drop down to the 15-minute. So London was super bearish. New York is now a pile of poop teas for the trader. So something else I've found is that if London has been moving nicely, then New York tends to not be as good after the fact, which sucks for us, right? But let's see what we could have done. So what don't we get? We do not get, this is a 15-minute. So we do not get the London lows swept. So we don't have that juicy sweep to work with. We have a ton of trashy, choppy mess to deal with in here. So let's look at it on the 5-minute as well. Oh my God, no follow through, none. So here's the only reason I would go long in any of this situationship we've got going on here. So one, we have this guy pushed. Now I'm bearish on the day, right? So any long would require this to occur for me to be interested in it, at least in this area right here. For a short, similar scenario, I would need this. I would have needed this to do that, tap that, drop, and then shorts would have been looking juicy. We got none of that in here, and therefore nothing to do. Literally nothing to do. We need follow through to be able to do anything. So this whole area is just a giant pile of crapola. Now, the PM though, the PM becomes a lot easier to swallow. So 2 o'clock-ish would have given us something. And what would we be aiming for? I mean, London highs are up here. London highs here. So we would have tapped into that grossness right here. So let's look at the 1 hour. So 1 hour for good places for targets. I'm going to disregard this bigger daily fair value gap for the moment because it has already been fully reclaimed. Oh, my nose is itchy. Guys, I'm so sorry. I apologize for doing that. So I would note that guy as a target if I were to get anything out of this very, very not juicy day. Because best believe it's not a juicy day. It's not a juicy day until... So we barely pulled past here. The lack of trust on this day is high. So the only thing I might, and when I say might, I mean very, very strongly, might have even bothered with for realsies. I'm gonna note 2 things. I'm gonna note this fair value gap here, this bullish fair value gap right here. And I'm noting it because they've used it as support to push up, right? And then this area here, we had a nice order block, a couple of not so good days for sure. Yeah, it's just not great. Like, especially for my model that's looking for certain behaviors to be able to get into the trade. Like, there's nothing in here to make me want to go long. Now, again, bearish, right? We're bearish on the day. So we have no follow through. none for the bearishness that I would need, and therefore I can't go short. And now we're pushing up, but it's ugly. It's ugly. I mean, with my short biased mind, maybe I would have thought, and again, we still wouldn't have gotten what I needed to go short. Because my other thought here would be, okay, fine. We've made this high. All right, we're just mess about. We're going to take it out here. Okay, great. Let's get a shift past this area. Sweep. Uh, uh, Short. We didn't get any of that. So somebody who's waiting for a short on a very, very bearish day, I would just skip it. I mean, there's nothing clean in here for me to do. I can't justify taking any of it. It's not juicy. Like, this would have been juicy if, like, this drop here and shift up would have been juicy if it had instead dropped below these lows instead, and then shifted up and did a small retracement and then ran up. That would have been better. But it just didn't want to take anything out. It's just not a nice day. Not a nice day. So we're gonna skip it. I wouldn't have gotten anything on that day. We're still gonna note the low because we're still bearish. We're still bearish. So let's see. What do we get the next day? All right. So we got some. Right. So things that we're gonna note here. Still bearish, so we're looking for a reason for it to like manipulate upwards to take some liquidity out, right? And then we're looking for a reason to go short. Let's look at the 4-hour. Ugh. So overall, we're still bearish. The 4-hour before that is a very juicy. I don't know if I would call it very juicy, but it's still a juicy candle, right? And the 1-hour, juicy down close candle. And then, it's gonna be another crap day again. Jesus. And then the 1-hour is still looking very bearish. Did they take London high out? No. Okay. So let's see what we could have done. We're bearish. We're looking for reasons to go short in this whole Mishima. So New York opens. We pop up a little bit. Actually, I take it back. This is actually a good day. Even if we don't take London high out, we obviously had some news. We reclaimed almost all of that news candle. And then we opened up and then 5-minute shift. First shift. And then we had a second shift. So now this is what I would have taken. I would have put it at the body of this candle right here. And my stop would have been 123 or something like that, right? That. And then I would have waited. And then, let's see, sorry. Let's go to the 1-hour for targets. We didn't check for targets. So for targets, on this day, we had this fair value gap right here. Nice, juicy fair value gap as a target that we could aim for. Because we don't necessarily need to get the lows, right? And then we had these equal lows down here for some sell side that we could be reaching for. And then we had this order block right here, these order blocks. So then we had the body of this order block we could have like also aimed for as well. So those are things that we could have been aiming for on this day. All right, so let's look at that. So given, the nature of things, I would have honestly just took the midpoint of this fair value gap like that and been perfectly happy with, what's that, a 1 to 3.63 on this trade. I'd have been happy with that. Because I don't need the added irritant of, seeing this rejection here on the 5-minute and then thinking, oh my God, and we're going back up, you know. But then let's also take a look at the 2 minute and see if we could have gotten an even better entry on the 2 minute, right? After this lovely drop right here. No, I think the 5 minute entry is the best option in this case. The cleanest option. Um, Actually, I lie. I apologize. Let's clone that. This entry here on the 2 minute would have also been good. And same target. So those are the two setups that I could have taken. And the reason why this is good, because we did get the full 5 minute shift here. We created an order block here. We didn't bother to tap that guy. We've left this 1 hour FEG and we didn't tap it again. So I don't expect them to come back up. So my stop would have been enough for this. That would have been a nice setup. Very, very nice. Because I needed that second shift, right? That's why I wouldn't have taken it here, because this is only the first shift on the 5 minute. I would have wanted the second one for confirmation, and then boom, juicy. And then so we would have gotten in at about 10:44, beautiful timing. So let's note that. So this would have been January 14th, 2025. So January 14th, 2025, that's a Tuesday. And the stop would have been 122 ticks. And if we got this guy, TP, 694, that's not bad. You know, I'm also thinking about trade management, right? Like, so from this entry right here, it would have dropped a lot. And no joke, if I'm being honest with you, I probably would have been trailing my stop kind of tight. If I'm going to be honest, I'm going to be really, really honest with this scenario. I would have trailed my stop super duper tight because we're getting close to it. And I wouldn't have wanted to give anything back. Because, I mean, you have all of this movement. Like, come on. So what I normally do, if I'd caught that version of the entry, if I caught that version of the entry, I probably would have been trailing the stop at the 5 minute here. So then that would have put me, instead of getting the full pull, that would have put me at 290 picks instead. Let me see. Because I sometimes like to drop it at the top of the 5 minute candle, right? So if that's the top of the 5 minute candle, 1, 2, 3, 4, 5, yeah, I would have probably dropped it there. But the other thing is, that's kind of like old thinking too, for me, thinking about locking in the money. Like, instead, I'm trying to focus on the structure. So in all honesty, if I'm aiming for this, the stop should be, if I'm using the 2 minute, the stop should be above here. If I'm going with just pure structure, right? The stop should be right here. Why? Because this is the last intermediate high that we broke low. So I'm expecting that they won't take that high out. So this is where my stop would be. So then I would have actually caught the whole thing if I followed that line of thinking. And moving forward, I have to follow that line of thinking, because if the structure is broken, then they're probably going to turn around and go in the other direction. So let's document that. So then we would have gotten tagged in at 1044. And the reasons for this entry. So again, it's in line with the daily bias. We're still very bearish. We're looking for shorts. And then we had 5 minute shift in structure. We also had, let's go back to the 5 minute. for this day, for this particular entry. Oh, we also had fair value gaps that have been disrespected. So the inversion fair value gap there. And we had a very clean market shift. We had a very clean market shift here. So yeah, we'd be looking for reasons to get in on the lower time frame, because trying to grab it here would be way too much of a stop for me. So that's why we got to go down to the lower time frame and find the most obvious area that we could take the short from. And this is the nice big run up. I'd like to see them stay inside of this order block, and we got lucky and they did. So that would have been a nice trade on that day. I wouldn't have taken that, obviously, because if I got into this one, it'd be good to go. But that's a secondary entry that would be useful. But that's why, my new view on the setups now would have requires there to be like a really, really healthy movement in the direction of the daily bias to be able to take that. So that would have been a nice trade. And no joke, guys, like if I follow the rules, it's so much easier to stay in line with the bias and actually like do well. Because so far we're back testing all the ones we would have taken. We would have we would have only lost one so far with entry model number one, and all of my wins would have been on entry model number two. You know what that's telling me is that entry model number one may not necessarily be the entry model I need to be using moving forward, and that's the reason why we're looking at this and being so very particular about which one of these we would have taken. So very. Anyway, let's move on to another day. So let's clean up. Let's refresh. All right. So again, we are still bearish. So before the next day even does its thing, what am I looking for? I'm looking for areas of interest. We have this previous day's low right here that they can go take up. Let's do, where's my sell side, right? We also have this low they're actually they're equal lows technically. Yeah, so there's like juicy equal lows below us here. Of course, we have more down here inside of this fair value gap that we're hanging out inside of. And then we have this daily fair value gap we got rejected from. So let's move on to the next day. And it looks like we got real bullish, nice engulfing. So let's see what we would have been able to do on this day with our bearish bias. Could we have adjusted our mindset? So things I like to see are like inversion. So if this was inverted and gave us an opportunity for a long, I would have taken it. So 4 hour on this day. Oof. Oh, so here's the problem now. When there's big movement in London, of all things, like New York tends to be a small day. So that New York session, we're gonna have to check, but I don't know, it might not have been a good session for us to do anything. And with London moving so aggressively, the only thing I would have been looking at, if I'm being honest, would have been this high right here for some buy side for realsies. And then once that was taken, I probably wouldn't have bothered with anything else. We also have equal highs up here, if I'm being honest. So I should also note that. That's why you got to look to the left, man. Like, what is there available for them to run? What liquidity sits there? So let's nip down to, where are we? Let's look at the 1 hour on this day. Okay, so this must have been news or something. Yes. So news 8:30. Wow. Okay. So sorry, London. I thought you had been pushing up. You weren't. You were consolidating like a mother. And then news was like, boom, yes, we're going. Oh, news. Mean. So we opened and we just ran up and took the first target. Easy peasy lemon squeezy. No joke. I don't know, man. I wouldn't have wanted to do anything after all of that movement. I hate that. I hate when they move before, when they give really aggressive moves before New York Open, because after that I just don't get anything. But let's look down and see if there was some 5 minutes I would have taken in the hopes that, or 1 minute that I would have taken in the hopes that they would continue on up to this guy. All right, so we had manipulation down a little bit, tapped into this big news candle for a bit. And then, and again, I don't trade prior to 9:45. So if we've moved and taken everything before 10 o'clock, I mean, I got nothing to do. All my targets have been taken. Like, what else am I going to do? You know? And now we've turned into a very bullish looking day. And New York Open was very bullish. So if I'm being honest with you, like once this candle popped up, this is what I would have tried for. Like the body of that. And then I would have to see where my stop would be. So again, 3 micros, 122, 23 would be where it's at. And then I couldn't have aimed for the first target. It's too close. So I would have tried for that one. And I would have absolutely gotten stopped out on that one. Absolutely. Um, the question is, would I have moved my stop to under this big candle? Probably, because of the order block it formed here. So let's look at the 2 minute and see if we could have gotten a better entry. Oh, okay. Got a little, thought I had another tool in here. So on the 2 minute, no, the entry would have been the same. Order block, we have this big fair value gap. The fair value gap to order block actually might have been, yeah, that might have been the other entry I would have taken just to see if I could get in there. Hey, what's up, Rainer? How are you doing? I would have done that in the hopes we could go that way. Yeah, I don't know, man. They already took like my original target. The question is, would I have bothered to get in so close to it? I don't think I would have, honestly. I don't think I would have. I don't think I would have. I don't think I would have. I think I would have been really salty that it was so close. I would have hoped for something lower down here and to take it. But if I were to have taken anything, let's go back up to because the thing is, I'm bearish, right? Like it's a bearish day. I'm bearish in my head, but here we've come across a very aggressive bullish move up. And having learned how easy it is for them to now just kind of either chop or go sideways, I've been very leery of any other movement at this point. Very leery. But for shits and giggles, let's see. So 10 o'clock would have been around here, 9:45. Let's say that I did take that and I did get tapped in and I did look to go for those highs because they did take it later in the day. I would have absolutely, positively been stopped out. Um, so if I got into this entry right here, we would have moved 245. Yeah, at that point, I wouldn't have wanted to take a loss. I would have put my stop right here to cover fees and things like that. So then I would have only gotten, what is this? 19.75 ticks on this long. I'd have been stopped out for break even just to cover fees. Sorry guys, my nose is so itchy. I don't know why that is. So let's note that because this would have been a very clear break even day. Hey, OG Hood 7, it's all shit. Just control risk and keep things simple. Price just go up and down. Trading is an art, not a science. Yeah, man. But history does help to teach us things, and it's why I'm so leery of the setup for the day. Now, the PM though would have given us something better. So we would have taken a break even basically in the morning. Let me just let me note let me put that in my journal here. So this would have been one of the first break even days, and this is January 15th, 2025. And this would be entry model number 2 because we had this, we shifted, we had a little break back up, and we shifted back up, we came back down and then moved. So it would have been a valid entry if we could just keep moving forward, if I'm being honest with you. What do you trade, OG? Are you a futures trader, Forex? What do you do? Or are you just like, enjoying the enjoying the view? So I'm just writing this into the journal, see where we're at. So yeah, and then that entry would have been at 10:05 approximately. And I mean, original clean, we had a clean market structure shift. Forex, awesome, awesome. I've never touched Forex myself, only futures and really only NASDAQ, if I'm being honest with you. We did have a fair value gap on this one. It's against my daily bias. Let's be very clear. This is against my daily bias, which was very bearish for this day still, because daily is very bearish. We had a very strong 5-minute shift. There was news as well. And we had no power of 3 in this scenario, none. And we did have an order block that we took the entry at. So those are the reasons for the trade. And the entry would have been on the 1 minute for this one. Just noting all that. So knowing that I can take one more trade for the day, I would have waited for something cleaner. So this is already taken already by then. So this is all that's left. So given that we're still bullish because we've gone nowhere, and on top of that, hold on. This is annoying the crap out of me. Okay. And it's not okay. I'm gonna delete this because this is, I don't know, try to keep it simple on the screen if we can. Technical science, gold sack man, take notes, Michael Huddleston. Hey, that's ICT, man. That dude knows that dude is his own level of guru. But as I always say, it doesn't matter what you trade, as long as you're profitable trading it and it works for you and you see it easily, do it. Trading should be simple. It should be easy. It should not stress you out. You should not be wondering if this is going to work. Well, the only reason why I care about the fair value gaps is because they give me an area of interest where, one either buying has occurred or selling has occurred, but not the other, right? So that gives them an opportunity to come back into that space and rebalance that and then, keep it moving. So what I like to see, and I've seen it playing over and over and over and over again as I've gone through old data. They're actually quite useful. They really are. And I've taken a lot of really great trades off of like inversion fair value gaps. And those are just fair value gaps that are no longer doing the job they were supposed to be doing. Like this one here. Hold on. Let me draw it correctly. See how I'm zooming in because I need to see the crack. See that little extra space there? Pop that puppy up in there. That's where that starts. And then where that candle ends. So I like to see, I use them as areas of interest to kind of explain. It's seriously, it's so simple. Even if you buy randomly on the chart, you would still have to. It's true. It's true. Even if you randomly just flipped a coin and said buy, sell, you could be profitable. And simplicity is where it's at, simplicity. So like my setup is very simple. I'm looking for a specific structure. If I don't see it, I don't trade. And I also like to look at the fair value gaps as reasons for me to continue my bias in a particular direction. So in this situation right here, you see how they use this fair value gap right here, tapped into this order block, and then it just kind of ran off. So now that puts me in a position where I feel comfortable taking a long in the hopes that they'll go up to this high. I'm gonna be honest with you, like that's what I would be thinking here. And they had this low that they manufactured, this little low they manufactured. They took that out, tapped into the order block, stayed comfy with the fair value gap. And then we had a nice juicy shift right here. And then we had a retracement. Look at how they just tapped it and then they ran away. So in this scenario, is this 1 o'clock? I would just be coming back from lunch. So I'll be honest, I wouldn't have caught this. So I would be waiting for another shift up and then a fair value gap to form. And then I would just, hopefully I would get some sort of entry. So this is what I would have wanted to try. Depending on where my stop is. And no joke, like definitely that wouldn't be where my stop is, right? So I like about a 123 to 122 if I'm going to go with 3 micros, something like that approximately. And then I would be estimating if this would be worth it. And that's a 1 to 2.84 with that stop. But let's be honest, I would not have gotten tagged in. Yeah, they would have missed me and I would have been sitting there like wondering if I should take it in here, right? So if this one was missed, then I would have nipped down to the lower time frame at this point and then see if there's something else, some other entry I could catch that would make this make more sense. So technically, we do have another entry that we could take. You can take it on this 1 minute fair value gap here. And I would be protected by this little order block, this little fair value gap, and that low. So yeah, that's why you gotta look at the lower time frames to see. And then we would have had to wait quite a bit of time, a couple hours, I think. Because after this thing, I would have been tapped in here, dealt with a small amount of drama, and then what's that? That thing is blocking. Just move. You're blocking stuff. So from that entry, we would have been in this trade for about, damn it, almost 2 hours, I think. Okay, sorry. Let me read the chat real quick. It's on this window, so don't, you know. I'm not looking at something else. I'm looking at your question. Da, 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 da. Imbalances. There are unfair exchanges in the buying and selling at the specific area. Exactly, as Rainer said, like fair value gaps, imbalances, same thing. Just everybody uses different nomenclature, and that's where it gets complicated, right? It's very annoying. Like, but it's the same thing. As long as your eye can see it and recognize it, that's the important part. Okay, and then how do you define what a fair value gap is? Like, what is it? I can see that it's not a fair value gap, and someone can say it's not. Trading is not objective, it's not black and white. Well, so an imbalance or fair value gap, it really is the same thing. So it's really just, and let's look at this one right here. Let's zoom in on this guy. Zoom in real tight. All right, so an imbalance or fair value gap, they're the same exact thing. You see how price is moving up, right? And there's this like, there's no selling. Assume this doesn't exist yet, right? We're just looking at this section right here. There's no selling. There's no selling going on. It's just pure buying in this space, right? There's, and it's usually nestled between two other candles to form it, right? Because, whoops, let me put that back there. It's usually nestled between two candles. So this is a bullish one because we're pushing up with this candle. We left this space in between these two because there's no selling yet. Not until here and here, but there's no selling yet. So it's an imbalance. So all they've done is just buy and push up. And then because this candle that formed up top here didn't dig into it and like pop back and close this in, that's why it's an imbalance. And that's why and I guess I was about to say that's why it's a fair value gap, but they're the same thing. Imbalance, fair value gap, same thing. So now what do? They like roll back down and then they rebalanced it. So now they're selling in this space. And then they went ahead and created a bearish version of it. Same thing. One candle on top, one candle. Let me move this. One candle on top, one candle on the bottom. There's space in between. And then all they did was selling. But they're using all of this to rebalance this and then tap back into the order block. And you see that happen a lot. Like, here's another one. They tap back into it and ran off. They do it all the time. They do it all the time. And the only reason why it's important is just to remember that they'll go back in them. We see this one formed here, same thing. This candle, no no selling inside of it. They ran back, tapped into it, and then took off. See what I'm saying? So that's the whole thing about fair value gaps. So this is 120. So an entry here would be nice. I'm learning to be less rigid about the entries in the hopes that we can get up here. And we would by 324. So things to consider, right? Once we started moving away from this entry and we like popped up really nicely, I would have moved my stop to just under here. Structure. I'm just working with structure, right? And for me, I need a higher low, or whatever that is, and then a low that breaks below it, and then movement above it. So structure. So we've made another order block here and then pushed up like that. So I'll put my stop here. And then this is just me managing the trade all the way. So then when we came up here, I'm not worried about it. I would have been thinking to myself, oh, hey, we have this fair value gap right here. I want to see how they behave inside of it. This is an order block. Do they want to come tap it? They did. Wow, we still snowing. They did. And then they ran back up. So then once I saw this movement and push up, especially this candle taking that high, I moved my stop to here. And then as we get closer, we see another like little low here area. At this point, I'm just locking in profits at this point. I'd move my stop there and then just wait to see if we tap it, and we would have gotten that one. So the PM would have been a better attempt at a short. So the morning would have been a break even for like 19 ticks or something like that. And then the PM would have netted us 320. So let's put that in our in our journal here. So we're tracking how well this would work for us. So we would have taken two trades on this day, and both would be entry model number 2, which worked really well for me. OG, you sound like you're really stressed. You all right, buddy? Trust me, like, yeah, exactly. We're just keeping things simple and control the risk. This is exactly my model. It's a simple thing. I saw what I wanted to see on the 5 minute. I go down to the lower time and find the entry there, and that's it. That's all. It's relatively simple, and then I'm just locking in price based off the structure, and that's it. Anyway, so let's see. We would have gotten into this about 136 or so. The reasons for this. So again, it's against my daily bias, but we did have a clean market shift. We have fair value gaps and order blocks to utilize inside of there, and we had a 5 minute shift. So, and then the entry would have been on the 1 minute or 5 minutes as appropriate. You think so? I don't think so. Like, look, what I'm doing right now is straight up hindsight testing, right? So I'm not coming in, I'm not putting the replay in and then pushing it forward to see if it works. I'm not doing that. So yeah, right now it's all hindsight. All I'm doing right now is locking in what I would have done that day, win or lose. I'm not trying to lie to myself to say, oh yeah, I would have held this all day and gotten this big move. No, I'm just trying to figure out what I would have done, and if I did that, what would have occurred, and then just document that, and that's it. And I'm doing this for a whole year, so there's going to be losing days, winning days. It's just what it is. So yeah, from a hindsight perspective, absolutely. But guess what, I've let me show you the trades I forward tested this week. Same model, right? And I'm using the same exact things that I'm talking about here. So, paper traded, by the way, it is an algorithm. The market, I mean, I think everybody knows the market is running off an algorithm. And then when they want to manipulate it, they go in and they do their own thing, manually. But most of the time, it's just moving on its own. But I think your consideration on it is like a matter of opinion, to be honest. And it's okay because I think it doesn't matter how you trade as long as you make your money. As long as you are making money, you could be flipping a coin. I don't care. As long as you're making money, I am happy for you. Trust the I. All right? Trust the I. Happy for you. But the things that I'm doing to get to where I need to go do actually work. Like this is the trade I took on Fridays on 3 micros. So my entry was here, and this is my exit. And the reason why I took this is that I was waiting for this particular entry from earlier. It missed me by a couple of ticks for the bigger run up. Couple of ticks. Oh my God, it hurt my heart. So when they came back down to the same area, I was like, I took the potential opportunity for that. Maybe they just want to come back down to the entry and then continue back up. Because I've been backtesting for a while, and I've noticed that NQ likes to be an asshole, and she likes to do that a lot. She likes to come back down to the entry and then she wants to run. So that's like $103 on micros, paper traded. And then let's look for the next little tickies. that I took. And then here's one off of a fair value gap of juiciness, my friend. If you don't believe that fair value gaps can help you, here's one I took off of a fair value gap. This was like a $600 trade on 3 micros. And this is a 15-minute fair value gap that price had used to as support to continue to drop price lower, right? So if we dig over here and look, these are not all wins. I lost this one. This is a loss right here, and then another win over here. Well, I don't know what that was. I was a small win over here on the shorts, but this is a loss over here. And then for some reason, it put me in 2 extra contracts for some reason. I was only trying to take it on 2 micros, and it did 4, and I had to close 2 really quickly. But anyway, this was a loss. And this was me being preemptive and not following my process and not waiting. But this is a 15-minute fair value gap. You see how, we busted below it, price respected it, and then dropped, tapped it one more time, and then. So my thought process, because I'm bullish, and this is for January 2026, right? I'm bullish. So I was waiting for, this is all paper because I'm not trading live again until I'm done with my exercises and in February. But I'm forward testing. So not HindSight, not back testing. When I see it in the market, I put the trade I would take on my live account in. Same scenario. You see the stop? 123. Right? I'm not trying to I'm not trying to change your mind or anything, but I'm just saying, like, the setups that I would normally take, the ones that I'm testing out now, are the same things that I'm also forward testing during the week. So just to be clear. And this is a nice fair value gap scenario that I was like, heck yeah. And I got an entry on this down close candle coming back into this order block right here. Very juicy. This is the top of the 5-minute fair value gap, I think, is the way that one went. 123 take stop. And then I was aiming for equal highs that was up here. And that worked out beautifully. So I'm just saying, like, it does work. And it can be complicated, but I mean, I guess it can be complicated if you're not used to it, right? But it's just the things that I see easily, And if you see something easily in the market and you see it repeated over and over again, why wouldn't you just use that and trade it? Because the simplicity is the same thing, right? We had a retracement, we shifted up. I'm looking for an entry here and then to go to my TP. It's simple. I'm just trying to keep it as simple as I can, my friend. But anyway, that's just to show that I'm not like just half-assing it or trying to overcomplicate. No, I'm just trying to see, I'm using these fair value gaps and order blocks and things to figure out where my entries will be and then just figure out where I might take my TP or where I need to put my stop. And that's it. All right, so we've documented this guy. What day is this? Wednesday? Sorry, we'll do the next 2 days on this and then we'll close out because that will put us at about 3 hours of this back testing or HindSight testing, I should say. So let's remove that. Let's go to the daily, reset, and let's pop another day. So again, given the daily structure, I would still be bearish, even though this is this big ass engulfing candle. So still looking for shorts, looking for a reason to go short. And I'm just going to note, it's too tiny. I don't care about that one as much. So we'll dip down to the 4-hour. So this is the previous day's run up, run up, run up. 4-hour London is very bearish on the 4-hour. And looks like it tapped into this bearish fair value gap and then rejected off of it. Ooh, didn't even make it to the midpoint. I like that. And just so you know, OG, on the daily, let me get my daily window up for you. We have for NQ, that's main. Is this my, it's the wrong one. Hold on. Let me change my, I gotta open up the layout I normally use. NQ markup, here we go. So, so just for funsies, on the daily on MNQ, we have this order block and bearish fair value gap that price has dropped from like, oh, hold on. Just to show you the power of these things, if you do choose to use it. On this is the daily MNQ. Look at it. We've tapped it, dropped. Bearish fair value gap right here. No buying inside of it. Now we do. They've come back up to rebalance it. Now we do. And then we just keep dropping from it. So I personally think like once we bust above this thing, we go fly. It's gonna be nice. Anyway, back to the regularly scheduled programming. So let's go to the 1 hour on this thing. So London was just dropping. So New York ended up just being a continuation. So looking for shorts. Let's go to the 5 minute and see what we could have done. All right, so not a terrible day. Not a terrible day. I don't like that we didn't get to sweep London high. Lows were taken out. We opened and dropped. Did some foolishness here. I would be interested in a short once we took this low out again, which we did here. So I'd be considering taking a short. So we have this whole order block dipped here, got a fair value gap in here. So I would have to see what my stop would be for this to make any kind of a sense for me to do anything with. So my favorite is 122 or so for the stop. And then what would we be looking for? We'd be looking for that low. See what else hold on. Let's see what lows we have on the 1 hour that we could dig into. Because that's too close. We need to get something else. So might have been looking for that low. Or that one. Or the body of that one. Either way. Well, yeah. Let's say we're looking for that low right there. All right, let's go back to the 5 minute. Would we have gotten it? So we'd have had to sit through a lot of drawdown. Almost, again, body of the candle, not the wick. Body of the candle, not the wick. After this, I would have wanted a little bit more, because this is a whole order block. I would have wanted this covered and to be above this fair value gap and a little bit into this one right here. So that would have been my preferred entry for a return back up, because I'd hoped they would hold and then drop. This would have been very scary for sure. We would have had to sit in some serious drawdown. And then looks like we would have gotten our TP at the base of that 1 hour candle. Don't need to look for the lows, just look for the extreme of the candle and just in the body if it's a nice return. So we would have to sit through some, technically there's a whole trade would have been drawn out until they chose to drop at 1. And we would have been tagged in at like, wait. Hold on. I also have to be clear. Would I have been sitting at the charts at this time too? So this entry would have occurred at 12 now. I'd been at lunch, so I wouldn't have caught that. The whole morning would have been a giant pile of shit, so we wouldn't have taken that. The only attempt we could have made would have been in the PM. And we would have liked this, but there wouldn't have been anything. Because this is the order block right here. We supposed to put it around it a bunch right here. And then we got a drop. I wouldn't have felt comfortable taking that. And this is after 3 o'clock, so I'm going to be honest, I wouldn't have taken anything this day. It would have been unfortunate, but that would have been the case. So I'm gonna be honest, none of that was like clean and clear and easy or within a time that I would have been sitting at the at my desk. So let's look at the last day of this week. It's a Friday. Okay. So that ended up being a bullish day. Let's look at the 4 hour. Prior to open, the 4 hour was very, very bullish. Okay. And then the 1 hour. So even though we had, oh, must have been news again. Even though we're still somewhat bearish on the overall day, we also have to take into account the session bias too. So let's take a look here. So that's the 1 hour, so 15 minutes. So again, I'm so sorry, London. You guys just get a rough patch for real. And then news, or just decide to push up. So on the 15, we dragged down, and then this would have been a shit day to trade again. Big move day, and then no big move before the day started, and then Sasha, and then no follow through. So altogether, I mean, we still could have probably caught something. There's a lot of movement. It just looks like it isn't. The AM would have been painful. You gotta wait for them to close above this foolishness. But there's no structure here that I would have felt comfortable taking either. So that would have been 2 days of no trades, the Thursday and the Friday, if I'm being honest with you. And I'm trying my best to be honest with myself. And the only real potential was at lunchtime, and I wouldn't have been there. So this would have been a no trade day for me again. Okay, so far we've managed to get through 10 days that hold on. 1, 2, 3, 4, 5, 6, 7, 8. 8 days of potential. 8 days we could have taken a trade. Most of them would have been positive. We would have had a break even. Oh, sorry. 7 days with 2 trades on one day to make it eight total trades. And it would have been positive. We would have had one loss in those 8 trades over those 7 days, and the rest would have been decently positive. And the one thing that's becoming very clear, and I'll be doing this for a whole year, so there'll be a lot of data to work with so far, is that the secondary entry is the best one for me to work with. And it's also better if if everything is in line with the daily bias and all that good stuff. So guys, I think 3 hours of back testing is good enough. Thanks so much for hanging out with me and the lively conversation and all that jazz. I don't know if it's the cold or something, but my nose is just not happy. But I want to say thanks a bunch for hanging out with me while I run through this process. And I hope this upcoming week of trading is awesome for you guys. I will continue to forward test my the trades I want to take moving forward in paper, as always. And then in February I will be back trading full time. So there's what I think next week's the last week. So look at this calendar. Yeah, this week coming up is the last week, so we'll be back looking for setups in February now. So let's get going, 2026. All right, y'all, be safe, be good. Shakira out.